Thank you for joining us. Justin, we appreciate you taking a few minutes. This is our recorded investor update for Stonebridge Apartments. This is the first Dixon Adams project DMI has done. We're really excited about how things have progressed. And I know you send pretty descriptive investor updates out to everybody, but I thought it would be beneficial just because of the stage we're at now with the property, that you could maybe elaborate a little bit on how things have gone over the construction period, the lease up, and now we're about to start having some capital events and distributions, and wanted to just ask you to walk us through how things have gone and what your thoughts are so far and what's coming up.
Yeah, I appreciate you having me. We are really happy with how Stonebridge Apartments came out. We started this back in September of 2020. We actually finished construction officially and got everybody off site back in January. Spent a few more months leasing up, but we have been able to rent significantly above our original rent targets for its first year. I think we're over 10% higher, which is actually a pretty large number. And we finished a month early. So, as far as the construction team, they did a really good job. The property looks fantastic. You don't always have the scenery like you do in this spot. It's surrounded by really nice trees. The drive up appeal is just outstanding on this property. So
these are the actual buildings here, Justin. This is no longer an artist rendering that we normally see when you start these.
That's right. They're all 3-story buildings, but if you notice around the perimeter, it's lined with very tall, mature trees. And of course, before we built it, all those mature trees were where we built the apartments. It's one of the things you have to clear out, but it leaves you with a really nice scenery around the property. The landscaping came out really well, matches it, and the pool area, all the amenities just go with the spot really well. It's really impressive when you're there, and the drive up is really good. The construction team did a great job. Gene Dixon builds these projects with GDD Construction. He's my partner in these deals, and he's a huge asset to be able to do development reliably, on budget, on time. It's actually a lot to ask. The problems that come out during construction, I know about them, but I don't have to solve them. The investors can know everything they want, but it's just so easy to do a development when somebody can overcome problems and still come ahead of all the targets. Specifically, we were a month early in construction, which is wonderful. It more importantly, we actually opened our first building several months early, which means we're able to lease up quicker. Really, the date you finish construction is not nearly as important as when you open your first leasing, because that's what takes more time. To finish construction is usually going to happen before you finish leasing. In this case, we were able to finish leasing just after construction finished. After we finished construction, this is a HUD financed project. There's a fairly lengthy project time to finish the project for HUD. They actually go through something called cost certification, which means they go through every bill, they go through where we spent the money and made sure that they approve of it, which is good for the investor because it's an audit that is third party and as official as you could get, and gives that layer of double checking that I think is valuable. Obviously, we wouldn't spend the money and the time to do it if it wasn't a HUD loan, but when it is, it's a benefit. So that process takes a good number of months, three to six. In this case, it took almost 5 months to get through that process. But after that's done, they look at how much we spent, how much we made during lease up, unfortunately, and decide how big our loan is. And we came in officially $105,000 under budget. So we spent a little less than budget. We also made quite a lot during lease up. We made about $500,000 during lease up. And one of the questions we get a lot when we're putting these together is the pro forma doesn't show a loss or gain during lease up. And it's another spot where we're very conservative in our projections, because usually it's extremely profitable and we just kind of leave it off because we end up with a good head start on our income. In this case, we've got over $500,000 made that is profit. Some of that did go toward a lower loan. It's one of the downsides of working with HUD. They want you to consider that toward your loan for part of it. So we ended up not only $105,000 under budget, our loan ended up $446,000 under what was planned. So we have more equity, more ownership. We have a lot of profit built in already in that sense. We also have that money ready to release. We're hoping to release the profit, you can see that operating account has $450,000 in it. We're hoping in January to do our first distribution. That has to go through a HUD process as well, but we're very used to that. We did just do our first distribution to investors. It will be going out to and hitting bank accounts in the next several days. That was the total project sent $230,000 back of the reserves that we held.
Just to clarify, because not every investor may remember the specifics. So with this project, it was HUD finance, like you said. There were some requirements with reserves that have to be held. And then once construction is complete and you get to a certain point, then there's actually a few different distribution events. And then with HUD, your distribution timeline, I think, is twice a year. So could you just kind of walk us through the distribution structure and then what's actually been sent from that structure and then what would be upcoming?
Yeah. So the first thing that you really want back is your reserves. In this project, it was 1.8 million and change. It was close to 30 or a little over 30% of the total equity was held in reserve by HUD. And now we go through the process of getting that back. They basically hold that for potential overruns and construction costs, but also they assume you're going to lose money during lease up while you're not full. The reality is it's the exact opposite. And so we never plan on using that money, although it's always there. So we've released the first piece of the reserves. There's 1.8 million and change held in reserve. We've sent out the first 230,000. We'll get the rest of the 1.6 million shown here over the course of the next 6 months.
So this 230,000 listed on here, reserves release, has actually been released out to investors, and that's a return of capital, or goes towards pref?
Yeah, it's a return. Well, there's no pref on this deal, so it's a return of capital. And so that money has been sent from the property to the DMI Stonebridge LLC. We are sending that out today or tomorrow. We're waiting for the bank to verify a few of our recipients. They go through a process.
So that'll actually bring the investor's basis down some because it's a return of capital then.
Yes, that's coming out. I think it was to the DMI entity. It was like 43,000. But we have a lot more coming in the next 6 months. So that's the first big piece of money. And that's one good thing about these HUD loans. Once you get these reserves back, your cash in the deal is low, which obviously helps your cash on cash.
And then what's the next tranche then expected?
So there's one that's not usually expected, but that's happening right now. So there's of the final project costs, we're 105,000 under budget. We're going to release 50 of it back to investors. I'm going to send the distribution today from the property to DMI Stonebridge to the investment entity.
Unused construction reserves that you guys planned on spending, it wasn't needed. You guys came in under budget, so you're going to be able to distribute those back to investors.
Part of it. Some of it went toward a lower loan, and we're going to distribute 50,000. So that'll be coming out. We just have to process it through the entities. So in the next week or so, another distribution will go out for that, and it's a return of capital, but it's also not profit, but it's great news. Obviously coming in under budget helps.
No, that's great.
The other piece that in the next 6 months, probably in January or early February, but sometime in the next 6 months, will be an actual profit distribution from renting apartments. We should have over $500,000. I don't know how much we'll send out. It depends how much we make between now and then, but it'll be a large amount because we've done so well. That'll really give us a head start. When you mix together getting the reserves back, getting a nice initial operating distribution, and getting a little bit of money back from being under budget, it'll give us a good head start toward getting our money out of the deal and getting great cash flow. So renting high will be good for the cash flow going forward, but having a good head start will be a big deal.
That's fantastic. Any other notable things on Stonebridge?
I think that's it. We're in a stable position. We do have a low interest rate. I believe this one is under 4%. I'd have to look to get exactly, but it is locked for 40 years, no balloon. So we could pay it off. I probably will, in the next cycle of interest rates, we'll probably want to refi and pull some money out. We'll wait till interest rates support that. But for now, couldn't be more stable than this property.
Yeah, fantastic. We really appreciate it. You guys have done a great job. Thank you, Justin.
Appreciate it, Eric.